Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, Dr. Ed and I did our quarterly ALCO webcast this past week. And one of the things that we include to our subscribers is a discussion about trends in the community banking industry. And two of the trends from that talk that I wanted to go over with you today is in net interest margin. Because where we saw a slight decline in net interest margin starting last year is that it's exciting news, at least this quarter, that actually net interest margin for our national benchmark group actually went up a touch in here, which with all of us expecting margin compression, is that it's the net interest margin in here has been very well managed on a national basis, so that we actually saw an uptick from a 387 to a 389, and then in the previous quarter it was dead even at that 387 level. So this is good news for the community banking industry that we really have not started to see significant compression in that net interest margin. So what community bankers appear to be doing in a very conscientious effort is to continue to bring down that cost of funds as their overall yield on earning assets come down. And that's what we've been saying, that we need to manage this very carefully in here. We need to know what volumes are running off in each particular bank of assets, what kind of rates they're running off, what kind of cuts in deposit rates could we do to offset that, to keep this net interest margin up as much as possible. So this was good news. Also, another piece of good news has been the trend in non-current loans. While still at a relatively high level in here, we've gotten it down almost to the 3% level in terms of non-current loans. So this trend continues in a very positive direction. So when we look at this in terms of overall and looking at the industry on an overall basis, my feeling is that we next on webcast talk about net overhead again. We need to bring these net overhead, which is the difference between non-interest income and non-interest expense. The industry needs to bring that into a better relationship where it should be historically, and also where we believe it should be for high-performing community banks. Have a great week. This is Jay Brew, co-chairman of Seafried and Brew.